The following is a presentation of TFNN. Live at TFNN, the Money Masters.
Let's go to Shivan in Boston. Shivan, what's happening, brother?
I'm watching you both on Tiger TV.
That's a beautiful thing.
Love it. Yeah, definitely it is. Learning a lot from Tiger.
Now, your Money Masters, Tom O'Brien and Steve Rhodes.
Welcome, folks. Steve Rhodes, Tom O'Brien, all you Tigers and Tigresses. We appreciate you growling and prowling out here with us. Right now, let's take a look. We get the Dow Industrials down 7, Nasdaq's flat, S&Ps are flat, gold is down 650. We get the silver off 20. Let's see, oil's down 75, bonds are off 12, King Dollar's up 16 ticks. Now, a rejected lower price, but we don't have the strength yet.
Yes.
You know, it's the strength. Yesterday,
didn't have volume yesterday on the way down, so that was
absolutely nothing. Yeah. Euro is at that 125.29. Our phone number is 877-927-6648. Well, we got to start with the dollar, man. My King Dollar. I gotta get a crown on this king, man. And you know, the bottom line is that
we'll bring our crowns back. I got my crown. It got dusted off.
Yeah, it's not cooperating yet. I like what it did yesterday. You know, it's interesting here. And of course, you're the King Candle man out here.
Yes.
It almost did a last engulfing, and what a last engulfing is, folks, is that at the end of a downtrend, it looks bearish beyond belief. And let's see. So what was that price there? That's close. I would have liked to see it close at the end. See, if it closed at the end, you know, and what it is that, you know, it opens high, it closes lower. You know, the volume characteristic, right? But, you know, we got to see if it can. It's inside the range again. You know, we got to see if it can get any juice. What we are going to have, of course, is that you got Friday, you got Bernanke. Jackson Hole, you got...
have they given a time frame on when there's going to be any release of any kind of when he speaks?
What you do have is this, is that one of the inside line, and I suspect, you know, this guy's pretty good at it, Mohammed Al-Arian.
Okay, yeah. He's the one that says it's a done deal, doesn't he? QE3?
Well, this is what he says, okay? This is what he's saying about what's happening at Jackson Hole tomorrow, right?
Okay.
Is that... You know, the only thing that's going to be said is exactly what was said.
What has been said.
In the minutes.
Yeah, yeah.
He said, no, it's already been said.
Yeah.
You know, so if that's the case...
Maybe he might give a definition on many.
Yeah.
Because you certainly got the governors out there with different ideas.
Oh, no.
You know?
There's no doubt.
Many, but there's several that are not on the many side.
Yeah, and that's where, folks, depending on, you know, what type of English teacher you had, that could be a class in itself.
Oh, well,
I had this class once, and this was one of the best classes I ever had, and I forget what her name was. A woman teacher, she was amazing, and the class was the rhetoric of no. That's what it was.
Was it? Okay.
Yeah. And it was dynamite. I mean, because you talk about you getting your mind twisted.
Yeah.
You know what I mean?
Yeah.
And that would be kind of like, you know, what is many? Well, you know, we know that, well, there's 12 Fed governors.
Yeah.
Okay? So what's many out of that?
Yeah,
what does that mean?
You
know, and there was the second part of it, too, right? Remember, there was a second part. It was many, and there was something else that was said inside that.
Yeah.
Greenspan must be back out there giving some lessons, folks. Totally, right? You know?
No, he was better at it, though. He at least had structured sentences that you couldn't figure out what the heck anything meant.
Totally.
And I think the words rattled off.
And everyone gave up.
What?
And everyone gave up. Okay, so, hey, listen, we are going over to China right now.
Okay.
And I want to show...
do it. Let's look at those warehouses.
Oh, totally, man.
Oh, yeah,
I had you thinking about that.
I want to get that article.
You got thinking about that, didn't you?
Yeah.
Okay. So... Last night, folks, Shanghai goes south again, but I want to show you something because I was looking at this earlier. So Shanghai is right now at 2053. Okay, so what I'm going to do is this. We're going to go back. I'm going to go back 15 years.
Okay.
If you're watching Tiger TV, you're going to see this. If you're not, I'll walk you through it. But if you get a chance to watch Tiger TV, folks, just come on our website at TFNN and hit Tiger TV. Okay, you get 9 hours every day. Now, what we're looking at, folks, is this. I have the Shanghai index up with the S&P cash.
Got it. Okay.
And what you're going to see is this. You're going to see that from 2002, okay, the correlation has been just about direct.
Yes.
You know, our S&P goes up, Shanghai goes up, or Shanghai goes up, our S&P goes up. It doesn't matter which way you want to look at it.
Yes.
The disconnect started in September of last year, of 2011.
Okay.
When we came down August, September, and then we start going back up,
yes.
Shanghai just continued down.
Yes.
Okay. Now, my take on that, and the same, I'm going to do this with Europe afterwards so you can see the correlation, you know, is that, okay, is that disconnect going to stay? Which you can make an argument that, hey, it's going to stay, it's going to be disconnected.
And that time period was
this time
about
period,
August 2011.
Yeah, remember the last downdraft?
Yeah,
See, when we came down last year, folks, what ended up happening is that all the markets came down.
Yeah.
What the difference is that Shanghai never went back up after that, just continued down. Okay, Shanghai last August was at 2,700. Now you're at 2,000. Okay, so there's your, you know, the yin and the yang of it. Now my take is that on a technical basis, it'll come back together. On a fundamental basis, it's even easier because the fact, when I look at business, okay,
yes.
Well, if Shanghai is done, okay, we know that Vale's done, the commodities, BHP Billiton's done, the commodities, you know, because they were buying.
Right, right.
So what's the next stop going to be, you know? Now,
and what I want folks to understand too is, as you're taking a look at Tom's chart, if you're watching on Tiger TV or in the Den, it's a directional look. It's not, you know, because the two indices are at two different values. So when you're seeing that line go up or and down,
that's right.
Okay, you're just simply following, in essence, the price movement.
That's
going
correct.
Out there.
That's correct. Yeah, right. So now, if we go over, if you wanted to see how these correlations go, okay, next we'll take the DAX.
Yeah.
We'll take a look at the DAX, okay? And the DAX, the FTSE, these babies here are still, I mean, you know, hook, line, and sinker directly correlated. I'm going to go back 15 years here. We'll do the same thing. And
okay, yeah.
Is that intense or what?
I would say that's a direct correlation.
Folks, this one here is like insane. In fact, let me go back 20 years and see what we have. I'll go back 25, so I can go back 25.
Yeah.
My God, I can.
Okay, so there you go.
I can go back 25 years. So look at that correlation.
Well, see, we say it's a one-world market, and the importance, you know, each day of us taking a look at what's going on inside the DAX, what is it doing?
Absolutely.
Yeah.
Isn't that crazy, though?
That's beautiful.
When you look at this, folks, it's almost hard to believe. It really is, right?
Yeah.
You know, it's like, you know. So in that context, China is going after the swing lows of 2008.
Yes.
That's what it's going after, okay? We've had more than a few equities go after it. Hewlett-Packard has already broken it.
Right.
You know, and that's probably a broken company. But the reality is that when I start putting all that together, it's like, okay, man, you know, they're holding Europe up, we're holding up, you know, and that you can hold them up for a certain amount of time. But, you know, when push comes to shove, bottom line is that lower prices, you know.
Yeah, I wonder what event, you know, was in that July, August, September time frame inside, between, you know, over in China.
Of last year?
Yeah.
Well,
I wonder what it was the disconnect that...
well, you mean that it just kept going down?
Yeah.
Well, I believe this is...
was there quantitative, was there some additional quantitative easing on our side?
Yes.
Is that
yes.
You know, I'm just trying to wonder if that was at the...
there was in China...
Twist program or something? Or?
There was on China's side also, okay? But what the difference is that the real estate market, folks, in China is such a bubble.
Got it, okay.
Is that they pulled back the interest rate slightly, and then what happened is that they realized that, oh no, we pulled them back too high. They're trying to go back in because and they can't catch it. You know, it's done. You know what I mean?
Yes.
So that aspect is bringing just everything down. That's what it really comes down to. Where in our markets, you know, what you have is that they got to let the bubble out slowly. You know, I mean, the last 2 weeks we've done 500 million at highs. Well, bottom line, folks, is that if you're going to get to higher price, you need more people in the store. You know, and when there's not more people in the store, it's a simple deal. It's you know, just a matter of when. You know, so and some of these high end, this Valley deal. Yeah, see, it's another low today. VALE, folks. This is screaming And this is a big commodity stock, iron ore. It has everything out there, but let me tell you, this is screaming. It's also going after those 08 lows. And, right now, we're at 16. The lows don't start until 13, but they go to 8.
Yes.
And, that is a big number. There's no two ways about it, So that affects, the key there to understand is that it affects huge amounts of supply line.
Yeah.
Caterpillars, the Deeres, the huge machines.
Yes.
It affects the currencies of those countries and the currencies of the countries themselves. If you look at the Aussie dollar, let's go look at the Canadian dollar, because the Canadian dollar has been strong like bull also. And she's at 98. She's still strong like bull. Let me pull this back and see what we got here. Yeah, but see, you know what? See, the Canadian dollar, all she's done, she's pulling back into where she popped from the bottom, 97 to 103. See, the Canadian dollar is basing out to basically come back to about this break here. I can make a case, folks, that the first break in September of 2011 is saying the Canadian dollar wants to go back to $1.16.
Yeah.
Which would make sense if, in fact, the commodities across the board are going to get into lower price because of the fact that the China's not pushing as much. Oh, listen to this one. This is insane. So last night, what happened is that, I got the numbers on the gold G.
Right. Yeah.
Okay,
That's
so
our largest position.
Yeah. So I'll spit it out, folks. Don't worry. I got that. Okay. So there's 2,475 metric tons that are owned by the ETF structures in the gold market.
Yeah.
Okay. That's the highest ever.
Yeah.
Now, there's a disconnect here because gold's not at highs.
Right.
And
right.
At the beginning
it is in Europe.
Yeah, it is in Europe. It is in Europe. Absolutely, man. In fact, we'll bring that up, okay? So the disconnect, though, this is what the disconnect is. See, at the beginning of the year, this is going to be one of the first years that gold has more supply than demand.
Okay.
But they knew that, and the way they knew that, folks, is this. Is that because gold is trading at the 1664, there were so many mines that started up 5-6 years ago that are coming on right now that are pushing it out.
Okay.
But when I look at that number, I'm saying to myself, hold it, that's a disconnect, man. And the biggest time that you do get very large pullbacks in gold, if there's too much supply of gold,
well, for sure.
Bottom line is that, we know every day you got to move it out at the end of the day. You're not sitting on gold at night.
I heard you talking about that last night. That's what it's like the hot potato.
Exactly.
Exactly. And during the day, when you got regular commerce going on, it's no problem.
It's dynamite. No.
There's enough spread out there so that you can pretty much stomach anything that goes on. Overnight, in this world,
well, just imagine.
Don't give me the hot potato.
Just imagine if you're a miner, though, and you got 30,000, 60,000, 100,000 ounces overnight. You're pushing that out. So there's a disconnect there, folks, because that's saying there's too much supply now versus the demand, and with $300, $250 off the high. Steve Rhodes, Tom O'Brien, you stay right there, folks. We're coming right back.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Folks, Steve Rhodes, Tom O'Brien, appreciate you growling and prowling out here with us.
Hey, Tom, did you tell me what Bill Gross was saying? And I just went...
Mohammed Al-Arian.
Okay.
What he was saying is that he felt that at Jackson Hole, what was going to happen
it's
is
going to be nothing.
It was going to be the minutes that you were out there, and that's what he's going to talk about. And what he talked about in those minutes, folks,
the reason I say that's right, it was because, last week when you had Fed governors going back and forth,
right?
We're not, or what have you.
Yeah.
He came out and said, hey, QE3 is a done deal.
Right.
So it's just kind of just interested.
And the cool thing about that, the real question is going to be then, as far as I can see, nothing. These QEs haven't stopped. I mean, it's a matter of what you're doing. I mean, they've been buying bonds for forever. So it's like, okay, well, what are you going to do in the QE? What is going to be done? I mean, right now, you look at those interest rates, folks. Those interest rates aren't because the whole world is buying our bonds. That's the Fed.
That's right.
Well, that's part of that demand is the Fed. It's a very large demand. Yeah. That's a nice place to be in.
Yeah. Well, the next place is they're just simply go direct with them for mortgages.
That would be dynamite,
right?
I would. Listen, man, that would be the
well,
here, now, folks, watch where this gets interesting. Okay, so there's everyone always has, so we can talk about the markets and. At 1 second people say they don't want regulation, and the same people that say I don't want regulation, they want the Fed buying in there all day long so the market goes up. right?
Yeah. Oh, absolutely.
So,
yes,
so watch this one. You got right. You just walked me. He just walked me right into this one. So it's perfect. So because the reality, my reality, okay, the Tiger Investment Real Estate Fund, okay, the Opportunity Fund in Tampa, the reality there, inside of that is that as credit opens up, real estate gets more expensive because real estate is just a signature.
No, absolutely. That's right.
So that would be a field day.
Yeah.
If the Fed goes direct, God bless them. You know what I mean? But see, that's a self-interest, folks. But, that's the sad part about really when you think about just whether it's politics or I don't even want to compare that to politics. It's a little bit different, but it really isn't that much different. Do you know what I mean? Because it's like, okay, where does that money flow to?
Well, it just depends. Yeah, when it's coming to you, it's a different.
Right. No, I know it's disgusting.
I'll
it's
adjust
disgusting.
just a tad. Yeah,
it's disgusting. It really is. No, I'm with you. It's disgusting, man.
Yeah,
it's terrible. Let's go to Dave in Jupiter, Florida. Hey, Dave, what's going on?
Hey, how you doing?
I'm doing great, man. You're sitting in a nice little place down there.
It's the best.
Can't
beat it. Can't beat it. I love it. But I got a couple of things for you before my stock/fund.
Cool.
The first thing is Bill Gross just reiterated that the QE3 is coming on CNBC.
Okay.
And he said either Jackson Hole or at the meeting on the 12th, it's coming.
That quick?
That's his opinion. That's his opinion. Second thing is, I just was curious if you could check. I vaguely remember in 2008 that China's market went down before ours. And I'm wondering, was it a couple of months ahead? Was it in the summer and ours went down in the fall? Can you look that?
No, I can, and that's why I've been all over it. You're absolutely right, man. And Dave, it was a couple months because that's
what I thought.
You picked that right out of my head. You gotta love life, man. That's why I've been watching it so closely. So when I did this last night, right, I says, man, the disconnect's been there for a long time. It was the peak, was October 2007. Okay. And the disconnect was a couple months. That's what it comes down to. Do you know what I mean? Meaning.
Okay, I thought they preceded us by just a little bit.
Yeah, it's actually. Let's see. Let me let's compare this S&P again. So when I update this, what you'll see is that they actually dropped before we dropped. It was the same time, but what we had is this. We were at. S&P was, let me see this one.
Oh, right at the same time. We were October 19th.
Yeah, it's pretty
October
close.
19th, 2007.
It's pretty close.
Was the high.
What happened in the summer of 2008? That
was the difference. The difference is our S&Ps went back up and theirs didn't. Hey, that's kind of interesting. See, what happened in March. Well, if we go into 2008, if you go into February, right, they continued lower. We had a big bounce. We bounced really well and then went south. And that's where the disconnect was in a big way. So
Okay. Now,
but it was there.
That parallels what's happening now pretty closely.
Well, except that this one here has gone on since September. You know what I'm saying? But to me, I mean, I know I get volume at those lows, so it's like, hey, those lows are coming, due. You stay right there, okay? Steve Rhodes, Tom O'Brien, we get Dave from Jupiter. We want to hear from you folks. What are you doing out there? All you Tigers and Tigresses. We get the 6. We get the Dow up 6. NASDAQ up 1. S&Ps are up 1. We're going to be right back.
Tom O'Brien's daily trading newsletter, Market Insights, has delivered powerful results for subscribers, and now is the perfect time to try it out for 2 weeks absolutely free. We're so confident in the value Tom provides his subscribers in his daily newsletter that through Labor Day weekend only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom's best-selling book, The Art of Timing the Trade, your ultimate trading mastery system, completely free of charge. Will even cover the shipping cost. Cancel at any time during your 2-week free trial to Market Insights and pay nothing, and keep Tom's free book as a gift from us. This offer is only valid for new subscribers. We've only extended this offer once before, and it will only be active for a short period of 2 weeks. So act now to take advantage of this great offer and be ready to capitalize on a more active, more volatile market once traders return from their August vacations. All the details are on the front page of TFNN.com. Sign up for your free trial to get your free copy of Tom's best-selling book today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. Appreciate you growling with us out here. Right now, you got markets are flat. Gold's down 770. Let's take a look at some of these large caps out here. We got Caterpillar down $1. Disney's up 10 cents. Big Blue's up 78. We got Walmart up 57. We're talking with our man Dave from Jupiter. Yeah, so it's going to be interesting to see how this whole thing does shake out. Gross didn't move the market at all, so we'll see. But, there's no doubt that, PIMCO in general, folks, okay, they're bright people beyond belief, and they understand the bond market. And I think the bond market dictates more than anything. It still does, too. Do you know what I mean? It really does, I mean, he was wrong a couple years ago, and it hurt him for a year, but he switched that pretty quick. So we'll see where it shakes. If in fact the QE is coming, but as I'm talking, folks, I'll tell you, man, you gotta love it. As I'm talking, gold just went from $7 to $12. So gold, folks, is screaming that it's not going to happen. Dave, you know what's crazy? I'm looking at the screen. I'm saying to myself, did I just see right here? I'm not kidding, folks, because I'm going through this in my head. I'm saying to myself, okay, hold it. It's next week, right? It's Friday of next week. Well, someone that has a lot of money just said, oh no, it's not, because I just sold 6,000 contracts and broke every low that's been out here for the last 5 days.
Well, to me, it's such a disconnect, because with China going south, if in fact it is, obviously that's a negative for commodities. and gold would have to be the outlier, trading differently as a currency or whatever you want to call it.
Yeah.
Rather than as a commodity, as all the other commodities have been in the tank, as you're well aware.
Yeah. No, there's no doubt about it.
And with Joy Global and Caterpillar going south again today, all these, I'll tell you, I'm on the bearish side, as are you, and it just seems like the signals are everywhere, and the double top that China had over the last several months seems to resemble ours so closely, if in fact we're at the second top.
Yeah. No, I'm with you. You know what's wild, and that's what I believe you're hearing from you too, Dave. What's really cool, what I really like about where we are right now, is that, see, we're technical traders, okay, but the aspect, even when I started in 1980 in the bond market, it was always the bigger macro deal with the financials, you know what I mean, other than the technical.
For sure.
And in this case right here, what Dave is just talking about there, just common sense. To me, just common sense is like, hey, listen, the market is screaming. China is screaming. Caterpillar is screaming. Deere is screaming. Joy Global is screaming that, hey, listen, man, everything, is basically on hold. It doesn't mean, and I remember, it's interesting. I just remember the Hong Kong market trading like this. Like years ago, folks, is that Hong Kong used to trade just like China, because if you remember, whether it's in the 80s or 90s, Hong Kong would take vicious retracements.
Yes.
And that's what you have happening here. Yeah. So I think it's in the cards.
Bottom line, if there's a worldwide slowdown, no matter how much money's pumped into the system, it can't make businesses sell more stuff.
Right.
No, all it does is you just revalue assets. So for a period of time, the assets get revalued because the money that's out there.
Right.
And and so it appears, as part of the shell game, that things are better than they actually are.
Crazy.
Unfortunately, that shell game stops at some point in time.
Crazy.
Yeah.
One more thing before we go to my stock. I'm glad the euro is down a little bit today, because I was going to ask you where to sign up for Elke's newsletter.
I'm telling you. She's got me nailed right now. Let me see what it's so funny. We got a good bet going on, folks, and I'm clean out here today, but we'll see whether I can get a sign of strength going.
Oh my gosh, sad.
It's good, isn't it? I know. All
right, finally, is ETP in a buy situation? Did it come back with lighter volume to that 42 area?
So ETP, this is Energy Transfers Partners. They own, operate diversified portfolio of energy assets, including pipeline operations in Arkansas, Arizona, Colorado, a lot of places. Okay, so the low for the year is 38. The high is 51. Pays an 8.4% dividend. That's a big number. Okay, so let's bring this back a bit. Put it on a weekly. Okay, so what do we have here? So...
Well, there's a couple things that I don't like. When you take a look at just November 11, 22 million shares on the way down. That low is 42.75. You're at 42.45 right now, so you're below that area. It's already below the on the weekly chart that June 29, 2012 level. That low is 42.65. Says that it should
in that zone.
Yeah, it says that you got at least on the weekly let it get down to the June 8th area at 41.15, but that's just simply on the weekly chart on this thing. And once it gets down there, then all of a sudden you're back in the swing point from October 2011. So so then that brings that back in play, and you're going to have to really pay attention to the volume as it comes into that high at 42.54, and you're in it. You're in it right now.
Yeah. So.
It's got caution signs out there.
It does, because what's happening, as Steve explained, Dave, is that low of 38 is in play, because the high of that low is 47.69 on the monthly. So it's like, okay, man, you're in it now, and you're in it with like too much. Like, see, this month you're coming down with 24 million. Well, that bar only has 21, so it's like, there's 2 more days left. That's not the end of the world, but you never want to see it go into it with that much juice. So it's like, let it go to the bottom of it, because see, what's real interesting is the bottom of that bar. When you go back over to the lows of 08, the top of the bottom of the bar, folks, is 39.74.
Yeah.
So you're going to be protected at that point. You know, because that's 24 million too. Well, you'd be protected as long as it doesn't come down with higher, you know, with more volume next month.
Right.
And what you're going to need then, you'd like to see some kind of sign of strength, which on a daily basis you haven't seen.
Yeah.
You know, so you'd like to just see
a steady dividend payer, and I'm looking to pick it up, but I guess a little more patience.
Yeah, and you got, you know,
technically speaking, that's what it says. Yeah.
And what happens here, you know, when you start paying, you know, when you with a REIT out there basically paying 8.5%, you got to be careful, man. We're not in an 8.5% equity dividend structure. You know what I'm saying? So it's like,
yes.
What's going to come out of nowhere, and all of a sudden it's 4.5%, 3.5%. You know, what is that? Do you know what I mean? Hey, listen, do you watch us on Tiger TV?
No, I listen regularly, but I haven't gotten into the TV part.
Okay. I was just curious, because what does happen, we got about, it's interesting, when we get the stats, it's about 50% on the Tiger TV and 50% on the radio. Okay, the reason I ask is I know you've been listening for so long, and I know it's harder to switch over because it's already set up. So that's why I was asking.
That's me. I'm a victim of inertia.
No, everyone is. It's no big deal. I just wanted to know, though, because when I'm looking at these stats and I'm saying, okay, you know, where is the audience? You know what I mean? So it's
right.
Well, listen, man, you got to turn into Tiger TV.
I will. You know what? I'm a slow adapter, but I'm a good adapter, so I will get to it.
All right,
okay, brother.
Sounds good.
Have a great one, man. Have a safe one.
I always ask people, so you like surprises, right? They say, oh yeah. So no, you don't. You only like the surprises you like.
Oh, yes.
That's
for sure.
That's right. Right.
Who's kidding who?
It's a good surprise. I like.
Oh yeah, totally.
That's change. Change. It's hard to.
Right.
It's we all. That's part of that's. And when you take a look at technology, which is always changing,
right.
And more tools out there.
Right. Well, it's funny.
That's I
can change in 2 seconds.
Yeah.
But that's if I want to do it.
That's right, yeah, of course.
That's if I want to do it,
right.
okay? Because I am a wicked creature of habit. You know what happens, folks? This is pretty sick. I go on eating things, and I'll eat them for years.
Yeah.
And it's crazy. Like, what happens, folks, is that if I eat a salad, a certain kind of salad, I'll eat for 2 years.
Yeah.
And then, if I go somewhere else, the poor people that I used to go to...
where's that revenue?
I see them, and they say, Tom, where you been? I said, man, what happened? I tried something else, and I like that. Now I eat that for 2 years. It's crazy, isn't it? It really actually blows my mind, really. When I used to have the office in Faneuil Hall, right?
Yeah.
They had, in Faneuil Hall is dynamite, folks. There's a lot of different things you can eat. And I remember I ate a potato every day for about at least 2 or 3 years, right?
Okay.
And then...
how'd you
Well, it was when they first, those potato stands started. So, you get the baked potato, and you put the vegetables in it.
Oh, you would? Oh, so you load it up, huh?
Then you'd put that cheese. Oh, forget it.
Oh, my goodness. My goodness.
You talk about, folks, making something that was healthy, unhealthy. I had the monopoly on that. My potatoes, I put so much of that orange cheese on it.
Oh, my goodness.
I love that,
that's great.
And then I went from that to something else, but I cracked up because when I went by those potato people, they were saying, what happened, man?
Yeah, for sure.
So I forgot what else I went on to, but I went to something else.
Yeah.
Someone's going on to the gold market right now, though, and they're whacking this baby. So it's going to be, that's what makes a market. There's no two ways about it. We'll see whether it failed at the highs. Well, you're going to get some juice here. We got 70,000 contracts already. So 70,000 is not that bad, but that's kind of that's pretty intense, actually.
Well, yeah, gold, so I can get rid of a couple lines out here real quickly here, but when you take a look at gold, what it did do on the daily chart, daily, weekly, doesn't matter what you're looking at, it broke through that trend line, and it's a long-term trend line.
Right.
So breaking through a long-term trend line, folks, is much more meaning than this shorter-term
Oh,
line.
yeah.
And the long-term one going back to the $1,923 high out there. So right now, it's just kind of coming into that area. But like you're saying, volume-wise, you got 70,000 contracts. Now it's going against 138,000 as it busted through there on August 23rd.
Now, it's going to be
interesting to really see what gold does here.
And what's cool here, folks, is this. On Steve's chart, you're going to get an amazing education, and we'll see which way it shakes out here in the next week. And this is what it is. Remember we've talked about a couple weeks ago?
Yeah,
see if
before that cone.
That's
yeah.
right.
Yeah.
What happens is this, folks, and I've seen this hundreds of times, not dozens, hundreds. When you have a triangle going, and you break out before the end of the triangle, most times, the first break is a false break.
Yeah.
And if this case here, that would be the false break topside. Now watch what happens, though. This is the dangerous part. When that happens, if in fact it's going to lay out that way, and it gets back inside it, it will break out the lower end of it.
Yes. Well,
now,
that's kind of...
what it would do is this. It would probably, it looks to me like it would have another, once it got back inside, it would have another month. So it would have another month. And what's
October 29th, in fact,
well,
which is funny.
It's pretty, this is what's cool too. This is where you can take the time element with life in general, just with a chart. And I remember, in the early '90s when I was looking at these, I'm saying to myself, "Oh, you got to be kidding me! I got to wait for a month." Because it's like that's like. Might as well be 8 years.
Hey,
you know what I mean?
You'd love to have a newspaper where you knew ahead of time where you were supposed to.
Oh, no, I love it now because I realize that a month is nothing.
That's right.
Do you know what I mean? So it's different, and I've seen so many of them that it's like, okay, hold it. You stay on something else until that's in. But this is going to be cool to understand, okay, how, because what happens is that these, like a long triangle like that, takes... Well, this one is taking a year and a half.
Absolutely, it's going all the way back to September 2011,
which is so cool because then you can plan it. You can see it and say, okay, man, that's what it's saying. That's a longer term deal. That's what it's saying.
Yeah, absolutely. So it'll be interesting because as part of this breakout here, as gold was moving up, you trapped a bunch of retail investors out here.
Oh yeah.
Those folks that kind of said, okay, now I'm getting back in on gold and potentially, a small kibosh.
There's no doubt. And my experience has been, that the bottom line is that after a long consolidation like this, you have at least 3 accelerations up that can bring the equities up about 30%, and then you pull all the way back again.
Yeah.
That's what kind of happens. Like when Dave just brought up Joy Global, check this out, man. This is I haven't looked at this for a long time, but this is an equity that has got cut in half, down from 101 to $50, and that's saying quite a bit too.
Didn't the ticker symbol used to be JOIG on that thing?
Yeah, it did.
Because I remember I hadn't looked at it for a while, and I punched it in, and it said, "No, that's some wrong symbol." What do you mean that's the wrong symbol. How did it get to Joy?
Yeah, totally. And what you have here. Now, here's a false break topside. So watch this. You're at $90. You're at $90 in 08, right? 46 million shares traded. Well, guess what? Oh, no, you took it out with 48. No, you took it out with 48. Then you hit a high with 32. You hit the high with 32, and then watch. You come off it with 58. Don't come off highs with volume, folks.
Oh, that's for sure.
Don't come off highs with volume.
Well, like any time you see volume on the way down, it's a time to take your profits.
Get out of town.
It may bounce back up there and give you another shot, but you know what? Take your money and go find another treasure out there.
No doubt. No doubt.
I mean, they're all over the place. I'm fortunate enough. I get to look at them every morning as market opens.
Yeah.
You're saying what's dropping out of bed, and you go right back to it. And you look what it does, and they all have the same signature.
They do.
Where they give you the opportunity to be able to get out of the equity. And
isn't that wild? Yeah. I know. They absolutely give you the opportunity. I think Alona is buying the dollar. I think she must have switched here.
Ilka?
I think Ilka's buying the dollar. I think so. I think she's getting ready. She needs some dollars to buy those pizzas.
She's got the direct link to Super Mario.
So Regina's. She's got the direct link to Regina's.
Yeah, Regina's versus Lobster. Jeez.
I know. I'd go for Regina's.
That's a good deal.
Yeah. Steve Rhodes, Tom O'Brien, all you tigers and tigresses, you stay right there, folks. We're coming right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question: are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of TFNN.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this: today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
30 days. I think that's what it means. Welcome back, folks. Steve Rhodes, Tom O'Brien. Appreciate you growling and prowling out here with us. Right now, you get the Dow Industrials down 19. NASDAQ is off 7. You got the S&Ps off a couple bucks. And, we were just looking, folks. So the Jobs Act, when the Jobs Act got passed,
yes,
there was one part of the Jobs Act, folks, that with hedge funds are going to be able to advertise. And that was supposed to go into effect on July 6th. And this is going to be a big deal. It's going to be a big deal because what you have is that it's a way of marketing, basically, funds. Now, and what happened just now, 20 minutes ago, is that the SEC just voted 4-1 for public comment. So it looks like I'll have to look and see whether the public comment's 30 days or 60 days. And what the difference is this. The difference, just so you can understand, and this is a dramatic change since 1934. So watch what the difference is. We have a fund right now, and the way it works is that you can have a website, you can have all the above, okay, and it has to be generic though as to what you're doing. Like generically, what we're doing: Tampa, St. Pete, Clearwater. We're buying houses, renting them, getting them at auction, whole ball of wax. So it has to be generic to that point.
Yes.
And then what ends up happening is that you have to opt in. So if you go to TFNN, you'll see right on the front page, the Tiger Opportunity Fund. So that is the generic version of it. Now, this is where the difference is going to come in. The difference is going to come in that whether you still are only going to be able to take accredited money.
That's right.
You still only be able to take accredited money. What the difference is, though, is that right now, like I'm doing a presentation tomorrow night and I'm doing one in Boston in 2 weeks. Those presentations what happens is that the accredited form is already in, so we know that the person is accredited, and they're saying they're accredited.
That's right.
What the difference is this. This is what the difference would be. The difference would be, once this rule goes through, that you can actually lay out the whole business plan to the world.
Yeah, yeah.
Then you still can only take accredited money, but that's a huge difference, folks, because the difference is that you are allowed to lay out the whole business plan. And that was in the Jobs Act, and I can see why it was, because the bottom line is that we've already hired 2 more people.
Yeah.
So
and what's great is that it opens yourselves up to being able to have many more different investments out there to be able to take a look at.
Big time. And investments that there's going to be all different kinds, but in our case, it's hard assets. Do you know what I mean?
Hard assets. It's also longer term, which is different than, when I'm kicking off the show or what have you. I'm taking a look at a day trade or what's going on a 30-minute chart here or there. There's longer term. Yeah. Well, you're looking for the value inside it. You're looking for. In our case, what we're looking for, we know that people don't have the cash to buy them at the courthouse, and that in itself, you're getting a discount right off the bat. Cash, or you're just simply busy. It's something that you should do, right? But you've got your life to conduct. No, exactly. Any other business, you're there. So how do you take advantage of something like that? No, exactly. So it's going to be wild. I mean, it's going to create a lot more businesses, I suspect. And some of them will be problems. Of course. There's going to be problems out there too. Yeah. So there is going to be the yin and the yang of it. There's no 2 ways about it. What is going to get interesting, and this is where I think the broker-dealer community is having a hard time trying to figure out how they want no regulations, but in this case. Oh, they don't want the want the hedge funds. They don't. Yeah, folks, this is going to be huge competition. You've had Fidelity and everybody out there, Vanguard out there advertising all over the place. This is huge. Not the hedge funds. No, this is huge competition. It's competition for the banking community. The reason it's competition because the way it's set up right now, it's a monopoly, and you know what? The monopoly is going to be broken. And the head of the security administration saying, this and that. He's yapping, but the bottom line is that it's going to happen. This is Steve Rhodes, Tom O'Brien, all you tigers and tigresses. We get the Dow off 21, NASDAQ down 9, S&P's off 2.5. You stay right there, folks. We get Basil Chapman coming up, Darryl Mott, David White, Ken Shreve, and then myself coming back. Take care, folks. Have a great day.